how to pay off a 30-year mortgage within 5 to 7 years. Is that possible? Is that a reality for most of you out there? The quick and short answer is no. And I'll explain with all of these numbers here that you see on the screen. The main thing is your cash flow. How much money do you have after paying all of your expenses? That includes your light, gas, water, sewer, food in your house, everything that you pay for on a monthly basis. After you pay that every month, how much money that you have left over. You're going to need that consistent amount of income to put towards your principal every single month to make this work, to paying off your mortgage quickly. Now, 5 to 7 years is a short period of time. You need a whole host of money to make that happen, to make that a reality. You need a lot of money to make that happen. And if you had a lot of money, guess what? You wouldn't have, in this example, you wouldn't have a 200,000 mortgage to begin with. You probably would have went with a 15-year mortgage if you felt you had that much money to save you some interest from the beginning. Now, most of us do not have that type of cash flow, so we end up with this $200,000 mortgage, and we're trying to figure out how to get rid of it without having to pay the bank an enormous amount of interest, buying them a second home or giving them enough cash to almost damn near buy the same home that you purchased. So here we go. Let's see if we can get rid of this real quick. Let's say we start out with a $200,000 mortgage, right? Most of us, you're going to go to the bank, see how much you get approved for. They're going to give you a number, and chances are you're going to go look for a house with that maximum number that the bank gave you and approved you for to go get the mortgage to begin with. So let's say I went to the bank told me I qualified for a $200,000 mortgage. They gave it to me at 5% for 360 months. My payment will be $1,073.65. And if I go all the way down here, that will be 360 months, which is 30 years right here, total of 30 years. I will end up paying this total right here, the principal of $200,000, and then I will end up paying them the interest of $186,508.65. That's what I will end up paying the bank in interest with. Therefore, we try not to make this money go down the drain out of our pockets and into the bank's pockets. So what can we do? You first get your home, then 4 years down the line, let's say we go back here. We just bought the home. 1 year passed by, second year passed by, third year passed by, fourth year passed by. You're looking at your statement saying, wait, hold up. I still owe $187,000 after 4 years. Where's all my money going? You're going to wonder, what can I do to save me some more money? I need to get rid of this fast. I still owe this amount of money. So what we're going to do is come over here. We're going to focus on our money at this point in time. After 4 years, we still got this left at 5%. We got 312 months left, so that we already end up paying the bank $38,794 in interest. And now we're saying, what the hell can we do to get out of this situation? So what are we going to do? At this point, we at 187,000. Now, what we're going to do is say, if I continue making these payments straight through, I'm still at the point where I'm going to end up giving the bank $147,000. 4 years passed by. It's not your fault. You just got your home. You was having fun. You're trying to furnish the place, and now you want to get focused. So now we're going to make some changes. How can we make this happen quick? So what we're going to do now is same situation here. We're going to take the 187. We're going to start applying some extra money. And what extra money are we going to have to use to get principal down? You're going to manage your money. You're going to start managing your bills. You're going to get yourself in order. You're going to get structured, get on a budget, make sure that you can have extra money at the end of each month and a consistent amount to make sure you can pay this. And I'm going to go say that we here in this example was able to save $350 per check, which in this situation, the person is getting paid bi-weekly. So $350 each check they're going to be saving. So that's $700 a month. Is a couple of months that you are going to get $350 extra. Basically, the bottom line is you got 26 checks in this situation, because that's bi-weekly. 26 times 12, you're going to end up saving $9,100. That's going to be your cash flow for the year. So what you're going to do is take that chunk of money and put it towards the principal each year. And what are you going to end up with in this situation? So annually, $9,100 going towards your principal each month, starting in month one. So at the end of this situation here, you cut down your mortgage from 26 years, you cut it down to 11 years by doing $9,100 per month, and you end up paying $54,171 in interest. That's a big difference from this to this. So I'm sure everyone out there would love to save this money. You have to. It's a must. You must save this amount of money. If you don't do it, guess what? To contributing all this money to someone else, particularly the banks, and not in your pocket. So this is a situation where we're going to be in. Now, I'm going to go a little bit further because out there, I know you're probably searching strategies and ways to do this, and people out there online telling you about this HELOC. HELOC is another option where you borrow money from the bank, a home equity line of credit. Use that money to pay down a chunk of money onto your principal. But guess what? Is that a smart idea? Because it's going to take some time to pay off that HELOC. And guess what? We already discovered that the only cash flow we have is that $350 per check times 26. We only got $9,100 per year. So what we're going to do is take out a HELOC for that amount because that's what we could pay for. Why would you want to do that, right? Let me explain why that's not a good idea. Amongst the downsides of having a HELOC, which you can find out online. I'm not going to explain that here. But let's say you saved up your own money each month. Instead of getting a HELOC, you will be your own HELOC because you already saved 9,100 and you already proved that you can save this up on your own each month consistently into a separate bank account in the savings account. So that's going to be your own HELOC, your own money that you're saving, $9,100 every year. And what we're going to do with that, ladies and gentlemen, this is what we're going to do here. So we're in a situation where the bank said, you know what? We're going to keep you at the same payment here. This is your same payment. $2 difference. You got to pay us a little $2 and some change difference from the 1073 to the 1076. But guess what? We're not going to charge you no more interest for the rest of the year. There's no interest here, guys. Look at this. At the bottom of this, we're not charging you no interest. What would that do? They charging you zero interest all the way up to the bottom. What is that going to do, ladies and gentlemen? No interest. What this means that I'm there, I'm paying the same payment, and without making any extra payments to this, I'm still going to be in the situation for the next 15 years. They're not even charging us any interest. Now, you would say, people saying, was it possible to pay off my mortgage in 5 to 7 years? Was that really possible? Was that really possible? The banks now is not charging any interest. There's no reason to go get a HELOC loan because this is like a free loan. They're not charging no interest, no penalties, nothing. So you're paying, it's going to take you 15 years if you stay on course, but we don't want to stay on course. We just don't want to owe anybody. If you're like me, you just don't want to owe any money to anybody. So you want to stick with the plan and say, you know what, let's pay $9,100 to this people. We're going to pay the $9,100 and I just want to be out of this situation so I can start doing some business and doing something else. So what we're going to do is still pay them with zero interest, $9,100. And guess what, ladies and gentlemen, without any HELOC or nothing, guess what we're going to end up paying? Guess how long we're going to end up paying? We're going to end up paying $0 in interest, but we still are going to end up 9 years. 9 years in the situation. So this is to show you, ladies and gentlemen, that you cannot, in this situation, if you don't have a big cash flow, you're already scraping everything you got and coming up with $9,100 every year. So this is all you can do. This is all you can do. So it's going to take you 9 years. That's the bottom line. This is the end of the story. It's 9 years. It's going to take you 9 years, ladies and gentlemen. You cannot do it if you don't have cash flow. That's the bottom line. They didn't charge you no interest. Forget about the HELOC. Forget about getting money from other sources. Forget about all of these finagling and juggling money from one side to the left. Forget about robbing Peter to pay Paul. There's no need to do it because there's no interest involved. This is your own money, and this is all you have as a cash flow, 9,100. So that's all you got. Then you still cannot pay this money back, even if you wanted to. You cannot pay it back. So no, it's not possible to pay it in 5 to 7 years if you don't have a substantial cash flow. That's the end of the story. I'm out.